The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. One more day till Nirvana, whatever that's going to be. May the best man win, as they usually say. Anyway, let's take a look here at the German DAX. This was very bullish coming into the weekend, folks. You can see the ABCD at the 382 level. This was partly, the reason why we expected the market to have a rally in here. So far, it's rallied a little bit. Hasn't gone up very much, but it's still up from the bottom that we started on Sunday night. Now, we will be looking at a couple of different things here, but they have a couple of announcements. First of all, Shane Smolian will be our guest here at the break. Tomorrow, we will have none other than Bill Meridian. And on Wednesday, boys and girls, do not miss Wednesday's show. It will probably be one of the better shows I have ever done. I am going to have as a guest Alan Quartermain himself. In other words, one of my good buddies going back 50 years is going to be talking to us about his life. He's never worked for anybody else. He's traveled all over the world. He's done everything, seen everything, knows everybody. And I won't use his last name because he doesn't want me to, but he's going to be talking about treasure hunting with Captain Kidd and none other than Blackbeard the pirate. And he'll be talking about his silver investments. And if we can coax him just a little bit, he'll tell us a story about the 65-foot yacht that he bought that was made out of teak wood, a beautiful custom-made yacht that was down in Puerto Vallarta, and how he had to sneak away from the federales because they were after all kinds of drug dealers, and that is what's happened. Anyway, you're going to like it. He's a really cool guy. We met him in 1970 at the Conti Commodity Office when it first opened. He came in and he was sitting there, and Don Honus was there. Don was a fireman for the Los Angeles Fire Department. His nickname was Sparky, and he and Sparky lived in Westlake Village right near me. And so Don came in, introduced me to Alan, and we took Alan back to Westlake Village to spend a couple of days. And he bought two houses in Westlake Village. He liked him so much. But anyway, it was really great. We lost Sparky last January. It's been about a little over a year. I have to tell you the story. He was getting ready to move on to transition, and he was chatting with his wife, and he said, we've lived in this house for a long time. It's a beautiful house, and I know you're young and beautiful, because she was. She's still beautiful, and she's in her 70s. She was a fashion model and a very successful one. And he says, you'll probably get married, and, you'll live in this house. And she said, honey, she says, I know this is the only house I've ever lived in. I don't know what else to do. And he says, how about my motorcycle? Will you get rid of my motorcycle? And she says, well, honey, that's up to you. I never even thought about that. And he said, how about my golf clubs? He says, well, will you give, my golf clubs to your new love? And she said, no, honey, that won't even be a problem because he's left-handed. Rodney Dangerfield. 1966 on the Johnny Carson Show. Let's move on to a couple of things here that we need to cover. We lost two great stars, folks, over the weekend. 007 passed away on Saturday, and then right after that, Mac Davis passed away. I knew Mac Davis. He was one of my customers at Drexel. We played poker the third Wednesday of the month from 1976 through 1981, and he was a great guy, just a super, super nice guy. But I have a great 007 story. Okay, folks, it's October 1982. I'm finishing my last year of pharmacy in Indiana, and the 007 Dr. No comes out. And what happened was, I didn't know that Helen Reddy passed away. Anyway, I went to see the Dr. No. And it was 11 o'clock at the Grand Theater there, and I went in, and it was packed. I mean, it was really a lot of people. And it was 11 o'clock. Of course, I'm a big popcorn and Coke fan, so I had my popcorn and a Coke sitting on the left side of the theater that I like to do. And I saw the show. Everything was great. I was going to sit through it the second time, but I figured I bet it was 11 o'clock. Now it was 1:30, and I'd already missed my physical chemistry lab. I had a physical chemistry lab. It was October, so the class had only been going on about 6 weeks, and I was having a terrible time. It was the worst class I had in all my years of college. So I'm walking out of the theater, and I get tapped on the shoulder, and somebody says, "You're in big trouble." And I turned around, and it was none other than Dr. Alan Smith, who was my P-Chem professor. He had his proctors doing the laboratory, and so he went to the movie also. And I said to him, I said, "Did you know that 007 was from Edinburgh?" Because I knew that Dr. Smith was from Scotland. Anyway, he said, "You're in big trouble," and that was it. Well, it turned out that wasn't too much trouble anyway, so it turned out to be okay. But that was the only 007 story that I can reveal. I always wanted to meet him, never was able to, but the first thing I did at the next gun show right after I got out of college was to buy a 32 caliber PPK, which was the James Bond gun that he used in all of the things that he had. And of course, they had the shoulder holster, all the stuff that kids from Terre Haute, Indiana get away with when they're young and foolish. Okay, boys and girls, let me explain something to you about where this market stands. It doesn't look very bearish. I don't know if that means anything on the market or not, but it really does not. If you look at the long-term picture of the stock market, you're going to see that it does not look that bearish. I hope I had it here. I prepared this. I think I did, or did I not? Nope, I did not. But let me get this up here. I thought I had this. Nope, I don't. What did I do wrong now? Shut the front door and raise the rent, Larry. Oh, here it is. It's just hidden from me a little bit. Here's where we are here. Let's take a look now. This is going back. It's only over the last couple of days. You'll see this last rally we had last night. You'll see how on Sunday night we opened sharply lower. We went down to the 61% retracement at 32.45, immediately rallied 80 handles up to 32.25. So that sets up really strong support at 32.85, folks. Very, very strong support. Now, whether that means anything or not, I'm not sure, but you got to pay attention to that, because if it gets below that, you could be looking at another move to the downside. And the reason why I say that, if we looked at what happened to the NASDAQ overnight, let's just get up here so you can see these numbers. I don't make them up. I just print them as I see them. You'll see the high that we made last night in the NASDAQ there at 11,210 was exactly 78% from the high that we made on Friday, and 50% from the high we made on Thursday. So there's your trend. Once you get about 11,250, this thing could be off to the races. And remember, we've been down since October the 11th, and we haven't even made a 38% retracement. Stop and think about that. That's an incredible feat in itself. But, this could change in a heartbeat, and that's one of the reasons why short-term trading is pretty good. I've got a couple of really important questions to answer for listeners that sent to me over the weekend about trading, and a couple of things that I think you'll be interested in. And thanks for all the comments about Tom Hugard's paper, his 25-page white paper on trading. That was really nice of you to send those out. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. One of the questions that someone asked me is about putting orders in because, we have these 24-hour markets all the time. And, unfortunately, I don't trade them all the time. I send charts out all the time, but I'm really more focused on what happens in the first 5 or 6 hours, well, not 6, but the first 4 or 5 hours of the market here, in the U.S. I do watch the U.K. because we have so many friends there and also our friends over in Hong Kong. We send the charts out, but I don't always trade them. But if you're going to trade them, the one thing that you want to do is make sure that you have your stops in the market. And because of these times, these markets close and they go on to the next one, you have to remind yourself to make sure that that stop is still in play for for the next session that opens up. So it's hard to keep track of all of it, but you've got to be able to do that yourself. And another question someone happens, am I ever influenced by market action? And the answer to that is, of course, I'm influenced. Let me give you a perfect example of it. Here's what we were looking at here. Those of you that subscribe to the 24/7 and the newsletter and stuff, you'll be able to see here that this low that we had here in the silver at 22.68 was a very, very important number. And so we thought that if you had a pullback in the silver here on Sunday night or early Monday down to the 382 level at 23.41, that would be a very good possibility for a buy with a relatively tight stop. That's what I said in the video that I sent out. The market had dropped on Sunday night. It dropped from 23.76. It dropped 30 cents in about an hour. So the Brain Trust here at Tucson, Arizona decided to do this. I sent out a nice little quick reminder to everybody and I'll bring it up to you here. It says here, do not buy at the 382. It's too close to the election. And it missed it by 4 cents of being the right buy. And of course, it didn't get filled, thank God, because if it would got filled, I would have felt horrible. And then it went all the way up to the 78% level there at 24.26. And so I go through these same things that you do, folks. You don't always know why. The other question that came up is about putting stops in. Why? The question was, why is it when I put my stop in, I always get filled at the high or the low tick? That's not because they're looking for your stops, folks. I can promise you that. That is really not the reason. The reason why I went to Chicago to trade on the Florida Mercantile Exchange in January of 1982 was because I wanted to make sure that the floor traders did not have a tremendous advantage of where the stops were placed. And if you've ever seen a pit, you'll see the lead brokers, the ones with the big decks, and the girls there holding the decks. Those are called paper fillers. They're lead option paper fillers. And that's where most of the action occurs. And markets during that time, the busiest one, of course, was a treasury bill market, followed by there was no S&P until April of 82. The gold was pretty busy. Jenny Mays were pretty busy, but those were the busy ones. So I was watching T-bills and I was watching how things were going, and I wanted to be sure that these stops were placed and that you didn't have to worry about it. So fortunately, I met Byron Tucker the first week I was there. He gave me a little schooling on it, but my real clear picture came about, so it must have been January of 1983. There was a cattle on feed report, a big one. The cattle, was a cattle inventory report, really a big one. And I'm short 3 pork belly contracts, and they're saying that cattle are going to be up the limit 3 days in a row. And I'm saying, oh my God, now I'm stuck with this. What am I going to do? And so I said, I went over to Jan Sklar, who she had worked for me when I was at Drexel. She filled all my paper through the firm I was going through. And what I asked her to do, I said, Jan, I knew she knew the guy that was holding lead option pork bellies, February bellies, because this was January, February was lead option. It was Ira Zeidman, and she was a friend of Jerry Sklar, who was her father. So she walks over to him and she talks to him a minute. And she walks over to me and says, Ira wants to see you. And I said, oh God, I'm in big trouble now. So I walk over. He was a little guy. He was only about 5'6", and he's on the top step. And he says, I understand you have a problem. And I said, sir, I'm very sorry. I made a really bad mistake. I shouldn't ask for preferential treatment. Whatever, fine, or, whatever happens, I said, I'll take it. I made a mistake. I apologize. And he said, the pork belly's going to be up the limit. And I said, well, the cattle are going to be up the limit because the cattle on feed cattle inventory report. He said, the pork belly is going to be up the limit. And I said, I guess I don't really know. And he opened his deck. This is the only time in all the years, the 3 years I was there, that I ever saw a deck. He opened the deck, and the very first contract that he was selling was to sell, I think it was 1,000 contracts of Feb bellies at the market. And he opened that up and he showed me. He said, now do you think Feb bellies are going to be up the limit? And I said, no, I don't think so. He says, go back to that T-bill pit and trade with the rest of those animals and leave us professionals alone. Cattle opened about 30 cents higher and went limit down, and pork bellies didn't trade for 2 days. And so what I thought was going to be a disaster was that. But it was the only time I ever saw a thing. I didn't get fined or anything. He just forgot it as being a foolishness of a young man. But that was the only time I saw it. When you traded on the floor, it was really professional. Sure, there was hanky-panky going on. Of course there was. But not to the extent that people think that they're out there searching for your one-lot stop. That doesn't happen. Believe me, that's you're just worried about that. Not to worry. So anyway, just keep in mind. I know there's a little chatter here this morning about Alan Quartermain coming on Wednesday. You will enjoy Alan. He's a super guy, and he's just a real stand-up guy. He's the kind of guy that always has your back, and we've been closest friends for, oh my goodness, I talk to him 3 times a week now for 50 years. I can't believe we've known each other 50 years, 1970, 1920. We were reminiscent about some of the things that we saw back in those days when there was, this was before the great grain robbery and stuff. So that's it. Yeah. Anyway, let's move on here to just a little bit here. By the way, David White has posted some stuff from Tudor Jones. It's really great stuff. It just really is. You should go into the den and take a look at it. It's really, really super stuff. We will have Shane Smolian here at the break. We want to be able to chat with him, of course, and see what's going on. And I want to bring to your attention here the importance here of a number that I'm looking at this morning here in the E-mini S&P. I'll bring this to your attention again. You'll see here that if the process that I'm working on silver and works on some of these other things, if this market is really bullish, like I think it is, there's a possibility we should hold 32.85. Now, if we start smashing through that, all bets are off. But, what we're trying to do when you're looking at pattern is to find the best possible entry you can, without risking an arm and a leg. That's the whole key. So that's the main thing that we're watching here today. We'll keep a very close eye on these markets, of course, for you by using the videos that we've been sending out. They've been quite timely, and, they've been showing pretty good. The euro still looks lower to us, folks. Might have a bounce here, but still looking lower. We'll be right back with Shane Smolian.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have wolftrader.com. Shane Smolian is our guest this morning. What are you looking at today, my friend?
Good morning, Larry. How are you?
Living the dream, baby. Living the dream.
That's what it's all about. Before we start, I just want to tell everybody that over the weekend I had a rate increase on the newsletters, and there was quite a bit of interest, I'll just say, to say the least, on that. So some people asked me about the gold package. So what I'm doing just for one day on the gold package, if you're interested in that, I'm going to keep it at the original rate for one more day. But then at midnight tonight, that changes. The rest of the newsletters have already gone up. If you sign up for the gold package, it's all the newsletters plus the new platinum service, which is starting. So I just want to put that out there because some people are chatting me and asking me about that. So just a one-day offer on the gold service at the original price of $225 a month. Okay, so just want everybody to know this, in case you didn't know, for whatever reason, it's just one more day. All right, so that's out of the way. Let's talk about COVID-19. So we haven't talked about this in a while, and COVID-19. So let me tell you about the news, and I'm going to show you this in terms of my data, which is collected from the CDC. I'm not just putting random data out there. This is actually collected. Everything that I show you guys is actual data. So the one thing I want to talk about is the COVID tests are at all-time highs of 3412. That's what we're just hitting these huge levels of testing. So obviously the number of cases is surging with this. So the question is, how do you figure out what's really going on? Well, we are entering a third wave of COVID. There's no doubt about it. Lockdowns are extending across Europe. But the one thing I want to point out is that the U.S. Percent positive rate is only 6.5%. So this is still below the previous two peaks of 8.8% and 21.5%. So I'm going to show you some graphics in a minute. But the first graphic I do want to show you is, and they never show you this on the news, this is the number of daily COVID tests versus time. So we're just persistently testing more and more people, as we should. I mean, this is a public health service. But keep in mind that as these tests increase, the number of positives will increase. So the next graph here is the number of positives in the United States. So you can see here there's a distinct number of three waves here. Now, if you look at this graph, it really looks as if each wave is successively higher. You see how it looks like it's just surging like this. But the reality of this is you're testing more people. So if you really want to understand what's going on, you have to look at this in terms of the percent positive test rate. And even that can be kind of misleading. I spoke to somebody who had COVID, and the whole family got COVID and went and got tested. She had to get tested multiple times before she could go back to work. She got tested 5 times, 4 times were positive, the 5th time she wasn't. And she said that the doctor told her every single time she tested positive, they're counting that as a new positive. So I don't know if that's true or if they've adjusted for that, but I'm just throwing that out there. That's a story that I spoke with somebody about. Now, this is the actual true curve of COVID. This is actually what's going on in terms of the positives. Okay, so back here in April, we had a 21.5% peak. That was the main peak. That's the first wave. Then you had an 8.8% peak here in July the 12th. This was right after the holiday when everybody got together. That's the second peak. And currently, we're only at about 6.3% right now. So, yes, the cases are increasing. Obviously, that's not good. But let's just put this in perspective as to where we are. And then the other thing I want to talk about is that obviously people are ending lockdowns and people are in contact, in close contact. And the fact that this is not much higher is a positive sign. I mean, think about this. These two other peaks were during a lockdown, and now people are out in contact, and this peak is still relatively lower. So that's a good sign. Obviously not good that it's increasing, but just wanted to point that out too. This is the mortality rate. And again, this confirms my graph, and I want to go back and forth. So let me show you the mortality rate here. This is back in April. This is in July, and this is what's going on now. If you look at this graph and you go back to my graph that shows the percent positives, they're almost identical. You see how there's the 3 peaks there, and each one is getting lower. So really, this is what's happening in terms of the country. Okay, now in Europe, it's a much worse situation. They are having these lockdowns, and it's a much more dire situation. But I just wanted to put that out because we haven't talked about COVID in a while. But you have to understand that as the number of tests start to look like this, you are going to get a spike in the cases. And you cannot ignore this. You can't, there's all types of articles that say, oh, the number of cases, tests don't, explain the number of cases. Well, yes, it does. I mean, it's obvious. I mean, if you test more people, you have more positives. You have to look at the percent of people that are testing positive. That is the key metric that if you want to understand what's going on with the disease, that's what it is. Now, it obviously can rise back up, especially in the fall and in the winter, and it probably will. It probably will keep going back up. This is not a good thing, but I just wanted to point that out. All right. So are we ready for S&P?
Okay, I'm ready.
Okay, here we go. So S&P 500. So S&P 500 is mixed ahead of the elections, but so one of the interesting things is that the Fed has been shutting down the juice ahead of the elections, and I don't know why they're doing this, but they are. So we have the Fed juice in a sell, we have the dollar juice in a sell, but the Astro is positive. So we really have what I deem as a mixed picture right now. And then, we know that the election, the volatility can get tremendous ahead of this election. So it's very difficult right now to forecast what's going to happen. But I will say that long term, I feel good about the market. And the Astro is positive in the beginning. Now, this is a very telling graph. You can see very cleanly here that the Fed has been shutting off the juice, going and specifically when we got into this high here in October. I want you to look down here because I have all these different levels of the Fed operations that I measure. But you can see here this little hump here correlates very cleanly with this top here in the S&P. It's they were increasing the juice in early October and they just shut it off, and so the market starts falling again. And so for whatever reason, they've shut this off. And like I said, they have their own reason for doing things. I can just measure what they're doing. But I can tell you that this pattern here, this is a pattern that is negative for the S&P on the short term because of the fact that they are decreasing these operations and these liquidity flows. Okay, so this is interesting, and to me, this is the reason why this market has been falling. Now, there is an interesting statistic which deals with the election in terms of the election barometer. But the election barometer, essentially, there was a level there that was a critical level, which was 32.5475. And that level is right where the market fell to. That's the July 31st level. And typically on that level, if it's above that level, the incumbent stays in office. If it's below that level, the incumbent is kicked out of office. And so essentially, that indicator, it has no use right now. So we can't really use the market right now to forecast the election. The S&P 500, the Fed uses in a sell. It is on the decline. There's no doubt about it. This chart was taken before we had this pop this morning. This was from last night. But this is in a sell, so this is pushing lower. And then also the dollar juice is also pushing lower here too. So both of these indicators are indicating lower on the S&P, but we have a mixed picture with that Astro because the Astro is trying to push this market higher. But the dollar juice has been in a sell since 10/20. So both of these are on the push lower.
Got to pay a few bills, my friend.
Sure.
Stay with us, folks. Shane Smolian, wolftrader.com. We'll be right back.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, we're talking with Shane Smolian, thewolftrader.com. Could you continue, my friend? Uh-oh. Don't tell me we lost contact. Broadsword to Danny Boy. Broadsword to Danny Boy. Come in, Danny Boy. The chicken is in the pot. The eagle has landed. Hello. The chicken is in the pot. The eagle has landed. Oh, dear. Okay, we lost contact with Mr. Smolian right now, folks. So until we get him back, let me try to fill in with a couple of things that I've been watching that look pretty interesting. First of all, is a report that came out by the Elliott wave theorists, similar to what Shane was talking about, showing that where the stock market is will tell you whether the incumbent or the usual dude is going to do it. You can see if it's above the new highs, it favors the red guys, and if it's in new lows, it favors the blue guys. So we'll see how that works out. I don't know. I know so little about this stuff that, and everybody has a different. What I don't understand is how these pollsters, there'll be one that says one person's 9 points ahead, and you go to another pollster and he's 2 points ahead on the other side. There's an 11-point swing. I don't understand how that could be, but statistically, but that's what it is. I think we have the man back. Shane, are you there? I can hardly hear you, my friend.
Can you hear me now? Can you hear me? Hello?
Yes, sir. I got you. You're
right,
ready to go. 10-4. Copy that.
All right. So this was the actual election barometer here. You can see that 32. It's like 3254.75, and that's an actual precise number. You go off the close off July 31st, and it's about 90%. So it's slightly above it, but really we don't really see any major advantage there. So you got to kind of throw that out as an indicator, which is a shame because it's such a good one. But again, it's flirting with that line. Now we do have the dollar getting stronger. Oh, let me screen share with you. Oops, give me 1 second. Here we go. Can you see the screen now, Larry?
Well, it's coming in perfectly. I see S&P intraday. There it is. Oh, there's your above Trump, below Trump.
Yeah,
okay.
There's the line,
okay,
guys. Yeah. So the S&P is right around here. So it kind of came down, and right on that October 28th decline, it came right to the line. So it kind of made things kind of muddy here. So above this is Trump, below this is Biden, and it's just right there on the line. So I guess technically you could say right now it's favoring Trump, but I don't know if I would put too much emphasis on that. right now. We do know that the dollar does continue to get strong through November. So this is a solar cycle of the dollar. And you can see that this is actually strengthening through about Thanksgiving. So that's negative for the S&P, at least on the short term. But then it starts to go through a weakening phase going there and after into December and whatnot. So, that's a key thing to watch. The dollar is important because as the dollar gets stronger, it gives headwinds to, the S&P metals and currencies. So, right now that dollar is strengthening. They haven't done the stimulus. So, each day that goes by that they don't do the stimulus, that's obviously a negative for the S&P. Now, Biden is still leading in the polls by 8 to 10%. So that hasn't changed. That has been very consistent. This is different than Hillary's lead. Hillary's lead was declining at this point. But there's some interesting things that are going on here that we gotta watch. Early voting is weak, has shown weak Democratic turnout in key states, and a lot of this is like even in Miami-Dade. I'll give you an example. Hillary Clinton was up 30% with the Latino vote, and Biden's only up 5%. There was in Dade County, the minority vote for the Democrats was for African American. She was plus 30. Plus 20, and the Republicans are plus 10 right now. So they're actually what we expected to see was a huge Democratic surge with the early voting, and we're not seeing that. We're seeing some leads in some states, but not as big as we expected, and they're expecting a late surge. So the election is close in the swing states right now. There's a lot. It's very close. And then I talked about before, there are large voter party affiliation switches going on in swing states. So I think there's more going on than the polls are letting on to here. But it is, you look at these polls and it's just like consistently 10% lead Biden. But then when you look at what's actually happening, this came out in Politico. This was actually the Democrats came out and leaked this. They said, we've got to stop the bleeding. This was in Miami where several key groups are not voting. They're not showing up and the early voting is weak. And Larry, I think this is because of the ground game, because the Democrats are very good at knocking on the doors, getting the people on the buses, getting them to the polling sites. And because of COVID, they didn't do that. And especially on the campuses, like the youth vote, like 18 to 24, that's been cut in half in a lot of areas simply because there's not a physical presence on the campus leading these people to vote that typically don't vote. They need like a nudge or incentive to do it. So this is interesting. So I don't think that these 10% polls, I mean, there's these two things going on when you look at this. The other one, too, in Iowa, Trump took the lead. And Iowa has predicted the election. If you go back in multiple years, Iowa has been like the number one predictor of the election, and he just took the lead. Trump is on a blistering campaign rally. And I've been looking at these rallies, Larry, like 54,000 people showed up to one rally, or 57,000. People are showing up in the snow and the rain. I mean, I've never seen anything like this. So it's the most bizarre thing. It creates like this cognitive dissonance because you look at these 10% and you're like, well, Biden has just got this clean lead. And then you go and you look at what's happening with the early voting and you look at these rallies. And then the other thing that I talked about is this election, this voter registration switch. This is like the number one statistic to predicting elections. And when you look at this is a net, by the way, guys, this is including Democrats and Republicans. It takes a net. The net has been switching to Republican. And this happened in Pennsylvania. This happened in Florida. This happened in North Carolina. This happened in Arizona. Now, New Mexico actually increased, and Maine increased for the Democrats. But these are the key swing states here. So it's kind of a confusing situation because you really just want to look at those polls and say, hey, Biden's got this in the bag. But then when you look at what's happening, it's strange. It's really strange. It's a strange situation.
Well, about 3 more minutes of this, and you won't be on the show anymore. So what do you got next?
Well, I mean, I'm just showing some statistics here. I just
okay. I understand. Yeah.
Okay, so this is the just to kind of go through this. This is the battleground states. This is the battleground states, and I believe this is the Senate, and this is the battleground states here. This is in the general election for. How can I read this? This is the national vote here. So there is a lead here for Democrats. It's about 7 points up, but I don't know. Some people are wondering if that's a big enough lead. In Florida, you can see here that the Republican vote is actually ahead. It's actually ahead. That's not supposed to be happening. That it was supposed to be a big Democrat vote the other way. And so, if we go down the list here, this is a close election. Ohio, Republicans are winning. So I'm very surprised by this. North Carolina, it's virtually a tie. So I was very surprised by this, and I just think that it's not as clear cut as these polls make it sound. I think as the initial polls make it sound. But for me, really, Larry, what it comes down to is what is the Fed going to do? And I really feel that on the long term, the Fed is going to be supportive of these markets.
Well, I think the Fed's got the key to it, my friend. Can you stay with us for a little bit of a wrap-up at the end of the show? We'll be right back with Shane Smolian, wolftrader.com.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with the Wolfman himself, wolftrader.com. Shane, what are you looking at, my friend?
Well,
Win
the
or
one thing
lose? Who are you betting on, Trump or Biden? That's what they want to know. Bottom
Larry,
line.
I have to go with Donald J. Trump on this. I'm looking at, and the reason is I'm going off of a lot of these statistics, these underlyings that I'm seeing, and the charts that I've done a big outlay on this in the Uranian newsletter, but they're pointing to a Trump victory. Now,
I have one other question. Are you old enough to vote?
I hope so. Yeah, I already
Okay.
voted early. The lines were they were short. I went at the end of early voting, but I just and it's unnerving to me because Biden has such a large lead in the polls, so it just seems like so unlikely. But from what I've looked at, I outlined some Astro charts, and I think Trump's going to do it. But look, these things are tough to call, and it's not just a 50-50 shot. You're basically going against all of these polling odds. So, and I looked at these charts for a long time, and of course these things can be wrong, but from what I'm seeing in the pictures on these charts, I think Trump's going to pull it out. Whether it's close or contested or it goes on, we'll see. It actually shows a specific time on election night. I talk about that in the letter, which again, it doesn't seem likely that he could win on election night with all of this mail-in voting and contestants, but that's what it's showing. So, we could talk about the specifics of that on another show, but that's what I see. The other thing is, guys, that I think that the Fed, you guys got to understand, the Fed's not going away. So no matter who wins this election, the Fed's still going to be there, and they're still going to be accommodating this market. So we have to understand that. And so looking at the market from a mindset of before 2009 probably is not the best way to look at this going forward. The Fed is not going anywhere. They may be pulling back right now. They're in a consolidation phase. Maybe they felt like the market was getting too overheated and they wanted to kind of calm things down, but I don't think they're going anywhere. Now, I just want to say one more time, guys, I'm giving a 1 more day offer on this gold at the original 225 rate, and then that's it at midnight tonight. And the other newsletters have already gone up, but if you want to take advantage of this, it's all the newsletters plus the platinum. So wolftraderfutures.com, come and check us out.
Thank you, my friend. Be safe.
Thank you, Larry. You too.
Vote.
Take care.
Vote often and early.